In this video, we are going to talk about the relative valuation model. So first of all, what is relative valuation model? If you are confused, then I will say you in simple. It is the valuation model in which you study that price to earning ratio, price to book value, price to sales ratio, price to cash flow ratio, and many more. You have been heard these words. So in this video, we talk about all these ratios, which gives you the 80 to 85% knowledge about the relative valuation model. Okay, so let's get started. And first of all, my name is Lokesh Koyalkar, and let's start this video. And at the end, I will give an live example and calculate this all ratios in front of you. Okay, let's move. So first, uh, who use it? So investors, as we discussed now only, the investors often prefer this valuation method because it is simple and less complex and simple to understand as compared to the DCF, passive discounted cash flow, and DDM, which is dividend discount model, and asset based model, and etc. So it is the easy and it is used by the investors for quick analysis of the company. Okay, what is relative valuation model? So in this model, the company is compared by the its industries and peer to peer of company to company to get a company's value, can company's value and value the company on the basis of its performance. Okay, let's move to the next. What sorry what okay, what when to use it? Okay, when to use it? It is used to know company's present value, means to know the company's value for the short term. Okay, relative valuation method is often used for the quick and comprehensive assignments rather than the long term, like the absolute valuation models like this DCF, which is discounted cash flow, DDM, which is dividend discount model, and many more. Okay, so when to use it? Here are quick valuation, when you need a fast estimation of a company value without performing a complex calculations like DCF, DDM, and acid based module, acid based valuation. Okay, next, comparing industry peers, where when evaluating a company's worth relative to simple company in a simple company, similar company in the same industry. Okay, next, market, in the market driven valuation, div- market valuation, when a market sentiments plays a key role, such as during M&A, which is mergers and acquisitions deals, or the stock trading. Okay, next is short-term investment duration. Short-term investment duration means when a market quick investments choices, especially in the stock market trading. Okay, next, inefficiency of data of DCF, when a company lacks reliable cash flow projected, making a DCF analyst and making a DTF analysis impact, means a companies which does not have the s- cash flow per cash flow and no profit, no profits, and etc. Only which company like startups go only in terms of their subscribers and in terms of their sales revenue. So for that type of company, we highly use this relative valuation method. Okay, because they not have profit, they only grow in their numbers. Okay, so next we see what is next is relative valuation multiples categories. So now, relative valuation multiples are generally divided into three main categories based on what they measures. So, in first introduction of this video, we talked about PE, PB, PS, P by CF. So these are the category. In these are the subcategories of the relative valuation multiples category. So see step by step. See what are the three main categories. First one is equity multiple. Second one is enterprise value multiple. Third one is industry specific multiple. Okay, so equity multiples are like the PE, TB, PS, P by CF, which is cash flow from operation, And equity, which is enterprise valuation multiples, are the PE by EBITDA, PE by EBIT, and PE by free cash flow. Okay, and and industry specific are those like which has the specific multiples, like in telecom it is EBIT, enterprise value by the subscriptions. In media also same like this. In the oil it is enterprise value by the barrel of oil. And in the real estate and uh, asset companies, like assets companies, which has the enterprise value by the NPV. Okay, so it is okay. Next, move to the okay. Next is we talk this all in details. So first one is enterprise value, enterprise multiple. These company, these companies, this compares companies' stock price to these financial metrics, and are used for the evaluating shareholders' value. Just we spoke about this equity multiple, what it mean. So it's first example for it. Example, the price to equity ratio, which is PE ratio, we commonly known as we commonly call and know it as. Next is price to book ratio, which is PB ratio. Next, wait a second. Next is price to sales ratio, which is P to C. Sorry, P to S ratio. PS ratio. Next, price to cash flow ratio, which is price to cash flow from the operation activities. Okay. Next, we see the uh, okay. So first, I will give you the explain the PE ratio, how it is. So PE ratio, to calculate PE ratio is equals to the company's currently per share value divided by the EPS, which is earning per share. This will be available on Google online. Okay, online you can browse it. Okay, so if assume to calculate PB ratio, assume company name A B T Limited. Okay, has uh, um, per share value, which is uh, currently trading at 100 rupees. Okay, and company's um, company earning per share, which is earning per share is 10 rupees. Okay, so earning per share is derived by total company's profit. Okay, revenue or profit or earning, you can say earnings in simple, we say earning, divide by the total outstanding shares, which are total share company has. Okay, we get the earning per share. Okay, now we know the company's share price. Wait a second. We know that the company's share price is trading at 100 rupees, and its earning per share is around 10 rupees. Earning per share is 10 rupees. Okay, so to get PE ratios, we need to just divide the share present share value, which is trading it now. It is 110 divided by the 10, which gives us the level. So PE is level, which says that the company has valued level time more, level X high than its earning. Okay, level X more than its earning. Generally PE should be around uh, 10 to uh, 25. It is considered as good. Okay, because it shows the company's potential. If the PE is if the PE wait a second if the PE is around 4%, then it shows the company growth potential is more or less. If the company is as the um, PE in between 10 to 25, it shows the company has the potential to grow in future. Okay, and if it is more than 25, then it is the overly overvalued. Okay, so next to move to the enterprise valuation multiple. So enterprise valuation multiple, as you see, there is this consider both the depth and the equity market. than the usual useful for valuing the enterprise businesses. Okay, so in this, the enterprise value, we will consider both the equity value. In the equity value multiple, we only take the equity values. In this enterprise value, we take equity value plus the debt. We consider both. Okay, debt we consider both. Okay, so for these examples, EV by EBITDA, uh, EV by EBITDA, and EV by EBIT, and EV by sales, and EV by cash free cash flow. Okay, so in this, I explained to you first for the first examples. We talk about the EV by EBITDA. EV, wait a second. EV. EV is enterprise value. Okay, enterprise value. Okay, enterprise value is the we get on online, or you can calculate it by the formulas. Okay, so when we get EV, enterprise value, then we need to divide it by the EBITDA. EBIT, EBIT, EBITDA, EBITDA, which is the earning. EBITDA full form is earning before interest, tax, depreciation, amortization. Okay, so this also we get in online, or we can do just a formula by net profit. We need to just add in net profit the interest, company's taxes, depreciation and amortization what company has been paid. Okay, we need to just add in the net profit. Okay, so we get the EBITDA. So to calculate the EBITs, uh, e, to calculate the enterprise value by the EBITDA, we need to just divide enterprise value by the EBITDA. EBITDA, EBIT, EBITDA. Okay, it is as simple as there is in saying. Okay, so we get the EBITDA. If suppose enterprise value is suppose 100 and 40, 140 rupees. Okay, and its EBITDA is EBITDA EBITDA is considered as um, 14 rupees. Okay, so we calculate just 140 enterprise value by EBITDA is 14. We get the um, 10 as the enterprise value by EBITDA. Okay, same we need to do for the all other. Okay, next we move to the industry specific multiples. So industry specific multiples, as we discussed that industry specific multiples, these vary based on industry's characters and unique financial market. Okay, so for example, EV, which is enterprise value, BOE, which is barrel of oil. Okay, equipment, equipment. Okay, equipment. Okay, so it is called as enterprise value per barrel of oil equivalent. Okay, equivalent. This is used in the oil and gas industries, which industries uh, has in the oil and gases industries. Okay, next, EV by subscribers, which is enterprise value by the subscribers, which is used by the telecom and media industries, like the for example, the CNBC, GBC, Airtel, and Geo. Okay. Next, P by uh, NAV, which is price to net asset value, which is used and used in real estate and mining. Okay. Next, we move to so example one. I will give to you that EV, which is earning to subscribers. Okay, earning to subscribers, which is earning to sub, which is okay earning. Wait a second. EV, which is enterprise value by subscriber. Okay, suppose a media company name, um, Lokesh, assume Lokesh Medias, okay, Medias dot limited, Ltd, okay, okay, which has the enterprise value of uh, assume as 100 rupees, okay, 100 rupees is its enterprise value, and its subscribers are um, 10. So we need to just, as we do in the many other like equity multiple and the industries industry enterprise value multiple, same here also we need to do same, where equity, sorry, yeah, enterprise value by subscribers, just do it, then we get the, okay, wait a second, we get enterprise value is ours, enterprise by subscribers, we get the 100 is the enterprise value, and 10 are subscribers, we get the 10, okay, we get 10, okay. So it should be equity value or enterprise value by subscribers, or you can say enterprise value by free enterprise value by uh, bearer of oil equivalent, and equity value for equity value for sorry, equity not price to net present value, sorry, net present value not, wait a second, net present value not, I did a mistake, net present value not, it is the net asset value, sorry, I converted, I calculating just another, so is we get n present price to net asset values, which is NAV. In the mining, it should, these all are should be under 10 as considered as the good, better, undervalued stocks, okay, undervalued stocks or undervalued companies. But the higher the these values are shows as the stock or the stock or the industries, varies from the industries to industries, which shows that the, if the industry has the high this values all in relative valuations ratio, then it is negligible, okay. Next we see the next example for this relative valuation method, we see the examples to it. Value the equity present value, PB, PS, P by PF, equity value to the EBITDA, equity value to EBITDA, equity value to free cash flow, equity value to sorry, equity value saying I am all enterprise value to subscribers. Okay, so for this we take an example of the Bharti Airtel, which is the telecom sector. Bharti Airtel is an Indian company. So let's do the solution. So we have to calculate this all ratios. We need to have some compounds to calculate this all, like price to share ratio, EPS, price to book value, market cap, sales, free cash flow from operations, EBITDA, EBIT, free cash flow, and subscribers. Okay, so these are the all of the ATL compound as on the 30, as on the, wait a second, as on the 31st March, okay, March 2024, okay, 24, and some are from the 1st April, 1st April, April 2025, okay. So let's get started. First we calculate the TE, okay. So to calculate TE, what we require, we require the share price, to calculate PE, we require share price. What is share price? Share price here is 1725 is by what is the earning per share, which is EPS. Earning per share is also paired, earning per share short form is EPS, which is 25.95, which gives us the price to equity as the 66.47. So if the Bharatiya Airtel earns 1 rupee, then its share value is 66.47 rupees. Okay. Ok- This is in terms of PE ratio. Okay, which is means that the Bharti Airtel is the overly values. Okay. But as we discussed that this all relative valuations are varies from the um, industries to industries, right? So next we move to next we calculate the PB, which is price to okay wait spend. Next which is PB, which is price to book value equals to the price to book value. We need to have the share value, which is the currently traded share value is the 1,725 rupees by the book value is the 150 rupees, 53 rupees. This all we can get by from the online Google or the company's financial statements. And you can just go on Google and search about the PB of Bharti Airtel and all. You can see this all in ratios on the online also, or from the stock market brokers and it is. Or you can just only calculate like I doing. So when we divide, we got the answer as the level point 27 is the PB, which is the price to book value. Okay, so price to book value says that the company stock should be buy in the 153 is the fairly value of a company to buy. It shows the book value. I am talking about book value. If the book value is 1:1, then it means the company's fairly value. If book value is less than 1, then it is means that the company is undervalued. Its book value is more than 1, then it means that the company is overly valued. And again, it is varies from the um, industries to industry. Next 2 weeks, go and calculate the PS, which is price to sale. Um, in this we need to take the total market cap of the Bharti Airtel, which is the uh, to calculate PS, which is price to sales. Uh, Total market cap of Bharati Airtel is 10 crores. Sorry, 10, which is 10 lakh 34,131 CR, which is crore. Pi crore means the crore means in crore means 1 million. Okay, in numbers 1 million is equals to the 10 lakhs. Okay, 10 lakh. Okay, so you calculate. ठीक है, you calculate. Okay, so next is the we need to calculate. Next is price to wait a second price to CF, which is cash flow, operating cash flow. So here also we need to keep the market capitalization. This is 10 crores. Okay, 10 lakh crore. Okay, just now we not calculate the complete value, no, of PS. Right. Wait. Sorry, I forgot it to calculate. Lucky calculate. Okay, PS is equals to 10 lakh 34,131 CR is equals to the total sales of the Bharti Airtel is 1 lakh 49,000 49,982 CR, which is crores. Okay, so which gives us the PS as the 6 point. Okay, 6 point. Circle. Wait a second. Which gives us the 6.89 SPS, which is good. Okay, which is good. Okay, this should be also the between um 10 or under 10, which is shows the good. Okay, next we calculate the PCF. Okay, wait a second. Wait a second. Okay, P by CF, which is equals to the market capitalization, market cap of a company by the market capitalization of a company divided by the operational cash flow, which is operational cash flow activities. Okay, which gives us the uh, wait a second. Okay, so which gives us the price to sales cash flow from operational activity. So we calculate this now. CF bar is equals to 10 lakh 34,131 CR, which is the market capitalization divided by the operational cash flow from operational activity, which is 78,898 CR. Okay, yes, CR. I not written here. It is a CR. Okay, CR. Hello. Now we are online. Okay, so just a little bit disturbance has been came. Okay. So what we are calculated? We calculated the present free cash flow. Now we calculating the price to cash flow of operational activity. Now we are going to calculate the enterprise value by EBITDA, which is enterprise value here. What is their enterprise value by EBITDA? We have already discussed EBITDA. EBITDA. We are keeping short form is equals to enterprise value was is what 13 lakhs 53,649 crores by the 90 EBITDA is 96,368 crores. Okay, so these all amounts are crores. So we get the enterprise value by EBITDA as the 14.05. Okay, it should be also under 10, which is considered as better, but it is also, as I said, varies from the industry to industry. Okay, next is okay, wait. Next it is EBIT, enterprise value by EBITDA, which is same enterprise value by EBITDA earning before uh EBIT, which is earning before interest and tax, which is gives us the enterprise value is what 13 lakh 54 3,649 crores by the what is the EBIT? EBIT is the 53,048 crore. Okay, which answer gives us the 25.52. Okay, next we calculate the enterprise value by the free cash flow. So it is the enterprise value, which is enterprise value by the uh enterprise value by the free cash flow the question what is enterprise value is the 13,500 and 13 sorry 13 lakhs 53,649,000 crores. Okay, divided by the what is free cash flow is 39,000 by 39,500 is the free cash flow, which results the uh enterprise value by the free cash flow. It results in the 34.27. Again, it should be also under 10, which is just better, but it varies from the industry. So, industry next, final uh, ratio is the enterprise value by subscribers. Okay, which is total enterprise value, which is 13,530. Sorry, 13,53,649 crores by the what is subscribers? Subscribers is 38,053 CRs, which gives the um, enterprise value by the subscribers is 3,513. Means if one subscriber is added, then company's share value, a company's enterprise value is increased by the 3,515 rupees. Okay, so let's compare this by the industry of Bharti Airtels, which is telecom industry. Okay, so Bharti Airtels P is 66,466.47 SPE. The telecom is 61.18. So in this, the Bharati Airtel lose 1 point and the telecom got 1. Next, PB, which is price to book, Bharati Airtel is less. So Bharati Airtel got 1 point and telecom got 1. Next, PS price to sell, which is telecom got 1 point, which is price to Bharati Airtel got no point. Okay. Next, in price to cash flow, the in this the Bharat Airtel got 1 point, which is 2 both are equal. Next, in the enterprise value by EBITDA, in this the Bharat Airtel got 1 point, and in the price to EBIT is in this also the Bharat Airtel got 1 point and industry got no points. Industries enterprise value by free cash flow not got enterprise value by the subscribers also not got in the telecom service, but in Bharat Airtel we got. So Bharat Airtel got more points. But this is not an investment advice or the financial advice. It is just for the educational purposes. This all examples and all this numbers are has been taken for. Okay, how this video help you? Comment down below, and It is what it is, and bye bye. We meet in the